Welcome, pro traders, and here we are for another Monday morning market review. Although we are setting them out on Monday afternoons or evenings now. So if you're watching this then please bear in mind that we are responding to your request to send it through at a time when you are able to watch this live. So if you are, then please do hit that like button either on the Facebook group or if you're watching this on YouTube. And if you're enjoying our material, remember that we've got a lot of free trading material in our channel on YouTube. And we bring out new relevant material based on request, what you ask us for every week. Some of it's more basic, but it's all very useful. And then when we delve into the more advanced trading techniques, obviously for those of you who are looking for that, you need to subscribe to the channel. That way you will be notified if you hit that bell of any new trading as it is produced, and we are doing that trading every single week. So let's jump into the charts. Just before I talk about the charts themselves, last week was another week where the professionals did better than the amateurs. We do get trading periods where anybody can make money. Right now, that's not the case. Last week was quite challenging. There were most of the instruments we needed to stay away from, but there were a few that produced some decent trading results. And if you've been able to grab those good trades, it would have compensated for a couple of the losers that we had as well. And you would have finished with a reasonable week. Nothing to write home about, but certainly the kind of week that produces our bread and butter. And also the kind of trading conditions that make sure that we're, as good traders, we make sure that we protect our capital. We don't get involved in trades that we shouldn't. Right, so jumping into the charts, here we are with the Euro USD on the weekly time frame. You'll notice that last week we got that bearish impulse candle closing outside of our HTC channel. It's not a valid M pattern, unfortunately, but we knew that already. But if you're just a channel trader, then certainly on the weekly time frame, it's closed outside the channel and is testing that support level that's just a little bit further back. In order to trade that, obviously, we'd be looking to trade our execution time frame being daily, something like a daily impulse. Well, in order to do that, ideally, you should be waiting for a pullback on that. For those of you taking a more aggressive approach and not waiting for the pullback, you would have entered at open this morning, and you so far you're doing okay. The dollar and yen strength is certainly a theme that started showing itself in the latter part of last week. We're hoping that that is going to continue for the foreseeable future, because that certainly will provide a lot more trading opportunities. But when it comes to trading the lower time frames, likewise, here we are still very much inside of our channel. And not only that, we don't have a valid M pattern either. So we wouldn't be looking at H4 or lower. Right, on cable, still inside the channel on weekly. We haven't seen as much bearish impulsiveness here compared to the euro. So the pound also showing some strength relative to the euros, you'll see on Euro GBP. But here on the daily time frame, you can see we've also had a couple of bearish impulse candles through the latter part of last week, also showing that strength. But again, we don't have anything valid here inside the channel and no valid WM pattern. Dollar yen, so these two being much more correlated. You can see very little happening really here on the weekly time frame, deep inside of our HTC channel, and even on the daily time frame, we had a bit of chop last week with a false breakout. Although technically it's not quite a false breakout as yet, but you can see the correlation here between the US dollar and the Japanese yen. No real significant directional bias at all. So not a pair we're looking to touch. On the other hand, of course, dollar Swiss on weekly, giving us that really nice bullish impulse candle last week. Still inside of the channel here, of course, on weekly, but on daily, giving us a really solid breakout on Thursday. So leading into Friday, looking for trading opportunities on that. So if you're trading any of our impulse strategies, you would have got into this already on Friday. Perfect setup here, very nice reward to risk ratio. So that would have been a really solid trade for you. And if you hadn't gotten that, well, again, you're waiting for the pullback. We've had a bit of flat behavior, typical Monday morning market behavior, but no further setups. But that is really a picture perfect H4 impulse strategy, setup, trade, and winner. You can see that if you just make sure that you identify the appropriate pairs and the pairs with the appropriate conditions, you can stay out of trouble and you can also grab those winners. All right, so USD CAD on the weekly time frame, threatening that resistance level now this morning especially. And here on the daily time frame, you can see even through the course of Monday morning, we've had a continuation of that bullish behavior with that impulse candle that we got on Friday. Apart from that, however, not one of our favorite pairs because we are deep inside the channel. We don't have any valid patterns, so we move on. Aussie on the weekly time frame, we did get a close outside of the channel here as well, similar to the Euro USD. So dropping to an execution time frame of daily, all well and good, but we need to wait for that pullback. Had you not done that, then you'd actually be doing okay here as well for now. Now, remember, trading is not about getting a winning trade. It's about working an edge, which produces a positive expectancy over time. So watch out for jumping into trades once an impulse wave is already well established. The social proofing is one of the cognitive biases that actually prevent people from being successful. So even if this does end up working out, you need to be careful about that, because trading like that does make it more difficult to limit your downside whilst maximizing your upside. All right, so that's the Aussie. We're still waiting there. And of course, here on daily, no valid pattern, and we're inside of the channel. But a pullback and a bearish impulse candle there would certainly be a setup for one of our daily strategies, as you guys who are in the academy know very well. Right, the Kiwi we know over the last while has shown significantly more strength. Therefore, it's still inside of the channel as opposed to the Aussie here on the weekly time frame. And similarly, though, on the daily, you can see that we're in that bearish wave with a few bearish impulse candles, but still inside the trend. No valid pattern at the moment. But of course, if we do get that pullback here and a resumption, we potentially could get valid M patterns to trade this for those of you who are exclusively pattern traders. But having said all that, the yen pairs have shown or have given us a few more trading opportunities. Here on the Euro yen, it's only now this morning that we are getting outside of our channel again. Remember, we did get that previous breakout, came back inside, tested that resistance level. It wasn't an impulse wave, therefore technically this trend, albeit weak, is still intact. We have not had a breakdown in that bearish sequentiality of cyclicity. But obviously for those who are only looking to trade when we have strength, you would not have looked to execute this yet on the daily time frame. But having said that, now we can see that even though we are inside of the channel still on daily, here we do have a valid M pattern. The unfortunate thing, of course, for folks trading either the hybrid or impulse strategy on the H4 time frame is that it hasn't given us any kind of an opportunity to get in this morning. It's just taken off like a rocket. We haven't had any real pullback. Threatened to give us a pullback here, but for those who are counting up to 2 points for a valid pullback, in my training on the anatomy of a pullback, you'll know how to do that. We only got 1 point there, so it didn't give us a valid pullback, unfortunately. It's just one of those situations where that is the case. Nice to see this directional bias showing itself, though, after the last couple of months. GBP yen on weekly, again, still inside of the channel and no valid M pattern. But here we do have a valid M pattern on the daily time frame, albeit also inside of the channel. So a little bit of our analysis just needs to be updated here as well, I see. Just get that all in line. In any event, doesn't change the dimensions really of the channel, not significantly anyway. But of course, valid M pattern. So if you are looking for that to trade the bearish direction, all well and good, except even more so than with the Euro JPY, we haven't been given an opportunity in terms of our main strategies here to get involved. So pretty bad that either the hybrid or the impulse. So waiting. Moving on, Swiss yen. This is a pair that we traded last week very successfully. So here on weekly, we are inside of the channel. And we don't have a valid M pattern, so nothing doing for using the daily as an execution time frame. But when we dropped down to daily, of course, last week we did get that very solid breakout of our HTC channel, and on top of that, it is also a valid M pattern. So this was picture perfect for us through the course of last week, and we got several very nice trades. We did end up having a loser later in the week, but that was more than compensated for by the fact that we had 2 winning impulse trades. The other unfortunate thing about this is that our hybrids was just stopped out as well, which just for a very small loser. But overall, this was certainly a profitable pair for us to trade last week and contributed nicely to our final results. CAD yen, nothing doing here on weekly, no pattern, just testing now. In fact, as of this morning, testing this support level at the bottom of our HTC channel. We'd need to wait for a solid breakout there, which would be at the end of this week, potentially. And also, as you can see here on the daily time frame, nothing, there's no valid M pattern either with inside C close. Yen strength just showing itself, of course, on Friday and today, but that is across the board. Aussie yen, same kind of picture, marginal here with the close last week, but a similar picture to Aussie USD, of course. But what is more interesting is the daily time frame. Although we are inside of the channel, we did get this rollover this morning. For anyone looking for a hybrid, either looking for the breakdown in bullish cyclicity here, which certainly we have been given, but as with the others, there has been no pause for thought yet. So we haven't been given an opportunity to get involved with that. I noticed that this trader couldn't handle the frustration, so you'll notice that they did get into a trade. But starting off, first of all, on the weekly, again, the picture here on Kiwi yen, very similar to Kiwi US dollar. And again, a bearish impulse candle to finish off last week, giving us a valid M pattern on the daily time frame, and therefore an opportunity to potentially start looking to trade this as of this morning with our impulse strategy. You may have been looking for a hybrid as well, in which case, depending on if you're trading class 3 patterns or class 2 patterns only, you may not have done that. As I say, this trader decided to get into a short on this, literally, what's this, at the start of the hour, at the start of this candle. I don't like doing that. You can see the actual trade, as far as I'm concerned, was here. This was a valid pullback, so you should certainly have shorted this market this morning at around 8 a.m. broker time. So valid trade for me there, absolutely. I just would have got involved earlier. That would have also given a higher reward to risk ratio with that tighter stop level. Also the stop in a better position and taking a lot less time to be able to manage the trade down to break even and therefore zero risk, plus making the take profit a lot more accessible. So for those of you who've been asking me about that recently, you'll notice that this is a perfect example of why we'd like to wait for a pullback, because really our reward to risk ratio is generally higher. We know that our stop is going to be above a validated, in this case, of course, a resistance level would be the other way around for a bullish trade, and our take profit more accessible, and finally, of course, being able to manage our stop to break even a lot more quickly. All right, but that is a valid short, even if this trade is taken a little bit late. So a nice example of how to trade a market like this. Right, so that's the end of the yen crosses. Euro GBP on the weekly time frame, still very much in this this channel. Nothing for us to look at, no patterns, and even on daily time frame, really the whole of last week was just a bit of a chop fest. Euro Swiss on the weekly time frame, a bit of a different story thanks to that Swiss franc weakness, where we have seen the an impulse candle for the weekly time frame last week. So on the daily time frame, Thursday, we did get that channel breakout. So there's no valid W pattern, and if you were waiting for that, you'd have to wait a little bit longer, and we may well get that now, seeing as today is giving us a bit of a pullback on this pair so far, although we'd need to wait for the end of the day. Now, we did actually, after that breakout, get a setup on Friday to take a long trade on this. We went long, so that has gave us an opportunity to jump into the market, but as of this morning, of course, we got stopped out for a small loss on this one as well. Had to take those trades, but it was pretty easy to manage that risk down, reasonably close to break even, if not completely. So happy with that. Euro CAD, absolutely nothing here on the weekly time frame. Very, very choppy. Looks like we're going to be able to update for another wave as of the end of this week, but I'm not going to second guess the market as of yet. Today, we are seeing some bullish movement, of course, but we are deep inside of a channel, and the whole of last week really was just sideways movement. So this is certainly the type of market that we like to stay away from. Euro Aussie, let me just make that a little bit more obvious. So we did have that bullish breakout previously, and after that saw the market roll over, come back inside of our HTC channel, also disqualifying us from being able to take any bullish trades purely on a valid W pattern. This is at best a class 2, and we would need a class 1 for us to be able to drop down and execute on daily. So having said that, let's see what happens during the course of this week. If we do get a close outside of our channel, then those who are pure channel traders may well start looking for execution opportunities here on daily, but that'll be next week. So I'll leave that till then. Euro Aussie on the daily time frame, there's no patterns worth looking at, and nor do we have, nor are we anywhere near to being outside of the channel. So we move on from that. The last of the Euro crosses, Euro NZD here on weekly. Last week certainly pulled back and closed inside of our channel again, showing bearish weakness, which also meant that on the daily time frame, we saw the end of that bearish trend, breakdown and sequentiality of cyclicity, and all of those bearish trades that we had gotten involved with, a combination of hybrids and impulse. We'd managed to get all of them to break even, but unfortunately, none of them worked out. They all stopped out at break even, and that's just the name of the game. So nothing for us to trade as a result. We are now staying away from that market. I think we did get a couple of overlays, which helped on that as well. So it's not like it didn't produce anything. GBP Swiss, remember we spoke about the Swiss franc weakness being a theme last week, which produced an impulse candle here on GBP Swiss. Also one of our more tradable pairs, so dropping down to the daily time frame. So nothing doing for execution on daily, but we did, even though we were inside of the channel here, a very broad channel, we've had a perfectly valid class 1 W patterns showing themselves again and again. Looks like as we came up to this resistance level though last week, it's rolled over, at least for now. It was marginally an impulse wave, and the last of our impulse trades over there got stopped out this morning, and likewise our previous hybrid got stopped out. So the impulse got stopped out for about 0.3 of a risk unit. So if you're risking 1%, that would have been about 0.3%, but we made about 1.3% on the winner with the trailing stop on the hybrid, which means that just on that, between those two trades, we netted ourselves another percent. So that's all well and good. Happy with that. It's been a reasonably successful pair to trade. You could see, although again, our hybrid, the previous hybrid, I think we spoke about this last week, that we executed on the 8th was also stopped out on the trailing stop, but for closer to 2% or 2 risk units, which was a nice one. And the previous impulse also solidly hitting its take profit, but the next one not. The next one getting stopped out. So overall, you know, this is a reasonably good picture of what trading is all about. We've got our winners and our losers, a similar amount of them actually, but the winners are substantially bigger overall than the losers, and that's how we make our money. So that was a good pair to trade for us last week as well. GBP CAD, however, not at all. So here on weekly, still, even though it's testing the top of our channel, so far nothing doing, and not interested in that at all. And you can even see here on the daily time frame, it's just caught in quite a narrow band. Consolidating markets, that's really just totally not tradable for us. GBP Aussie, different story here, with the overall Aussie weakness relative to the GBP strength showing itself. On the weekly time frame, this is probably the best picture that we have in terms of cyclicity being intact. And not only that, we're now moving into another bullish impulse wave. So those folks who are trading hybrid type strategies and looking for the end of that phase 2 by observing the bearish cyclicity on the daily time frame would have been a bit disappointed, because we've just had this very deep pattern with 2 very long extended waves, and today giving us in fact another higher high. So we are waiting for a breakdown in sequentiality of cyclicity here, with a bullish resumption on this time frame to look to go long here, and that would be, well, then it'd be questionable whether it's a hybrid or an impulse trade, to be honest. Either way, we don't really mind. But apart from that, there's nothing for us to do here. So we just got to bide our time, wait for that. Last of the pound crosses here on GBP NZD. So the one thing that's noteworthy here is the fact that we may well end up with a valid M pattern at the end of this week. We need to just obviously bide our time and be patient there, but that's certainly a possibility. But we can check that out in a week's time. Here on daily time frame, well, last week, as you can see, was really nothing. We just got an isolated low in this general retracement. So we've stayed away from this pair now since the end of that bearish move. Right, CAD Swiss, moving on a little bit now to our other crosses here on weekly time frame. Last week, giving us nothing. You can see, even though it was a bullish candle, so nothing impulsive about it at all. Back inside of our channel. Technically, this is still a bearish trend. We have not yet had a breakdown in the sequentiality of that bearish cyclicity, but A, we're in a retracement of that trend, and B, it's extremely weak because it hasn't respected what was a broken support level as resistance. And on the daily time frame, really, it's just reflected again in quite a choppy market, where on Thursday and Friday, that resistance level was tested, and as you can see, it's rolled over this morning and coming back down. For those of you who are looking to trade overlays on all phase 1s, even those that are inside of a range or a ranging market when they're bouncing off of our support or resistance lines, would still be waiting around, because this has not given us any change in cyclicity in a bearish direction. So I'd say right now that that's really ruining the picture for us for an overlay altogether. Moving on to Aussie Swiss. So here on weekly time frame, last week's candle not really doing anything. We are of course back inside of that channel. Not only that, but with this impulse candle, and just to remind myself, 21 or the high. Yep, so that was a higher close, phase 1. This is definitely the end of this bearish trend. So this final breakout here and followed by a bullish phase 1 wave means that we are in a technical range at the moment on weekly, so not looking to execute anything on daily. And of course, here on daily, you can see just for last week, just the update, really nothing to interest us at all inside the channel, and no valid patterns. So you can see across many of these pairs, we've just been ignoring them. And that is very important for you to be able to do, to sit in your hands and not look for something that's not there. Right, Aussie CAD. So similarly, nothing really to look at. On daily, that bearish impulse candle on weekly showing itself with some more interesting bearish cyclicity here. So we are in a phase 2 at the moment. Should this remain outside of, at the moment, what is our A point? If all the closes in what our current CD leg, our future B to C leg, in other words, if our future C close remains below that point, our future X, then we may well have a valid M pattern here. And for those of you who are trading hybrids, you're probably looking at this this bullish cyclicity already. This was a trade which gave us a bullish overlay last week, which ended up being quite a nice winner, and also just contributed to the reasonably decent results we had, even though they were nothing to write home about. Aussie New Zealand dollar. So this has also been a theme really for quite some time. For those of you who've been watching our market reviews will know this. This is the most extended bearish impulse wave on the weekly time frame that we've had across the board for I don't know how long. So this is now several months of lower lows. And even though we've had the odd non-relevant isolated high, this bearish wave is still intact. And last week giving us another lower low. And although it's a bit of a low test, hammer candle, it was still a bearish impulse candle, just closing somewhat high inside of the price territory for the week. So here on the daily time frame, really you can see our bearish cyclicity is still very much intact. It's been quite messy in terms of trades. We've had our winners and our losers, but certainly last week, whilst we were in this bearish impulse wave, we were looking for our H4 opportunities, and we got a few. We had a few losers as well. For those of you trading a hybrid, we did have that bearish hybrid setup, which if you were trading take profit only, you would have hit the full take profit on that for a very nice reward to risk ratio. Unfortunately, the cyclicity using our 3-6 trading stop rule, if you were using that in conjunction like I did, you would have been stopped out for, I think it was close to 3% gain on that. But we had another setup then to short this for an impulse, which ultimately went on to hit its take profit very nicely. And following that, we had quite an extended pullback, phase one on the H4 timeframe, which put us into a phase 2 on the daily, which means that we didn't take that short over there, which would have been, of course, that candle was the last candle on Friday, meaning that we would have looked to short the market on open this morning. Typically, I don't trade in the early hours of Monday in any case, but we would be looking for a retracement, which we may well be getting now, followed by a bearish resumption, and that would be valid for, well, again, it's questionable, what do you call it? Is that a hybrid or is it an impulse? Well, it kind of really depends where we're at. Is it going to be through the course of today, or will it be tomorrow? So if today does close like this, it'll be ringing that high into the phase 2, and of course, then we'll be back into a technical phase 1 on daily on this. So yeah, this bearish trend is still intact, amazingly. So that's why we don't second guess the market. We just follow our rule set. Kiwi Swiss, you can see here on weekly, didn't really do much last week at all. We are still in a technical impulse wave here on the weekly time frame, bringing us right into the middle of that HDC channel, and there's no valid WM pattern there at all. Through the course of last week, we did have that breakout, but it rolled back over again, and even though we had a higher high on Friday, that seems like that's being ringed at the moment, which means phase 2, end of that bullish trend altogether. So putting us back into a technical range, certainly not one of the more interesting instruments for us to look at here at all. So Kiwi CAD, also inside of the channel, if we do get any kind of a pullback, this inside bar not being enough of that, then we could look at having a valid W pattern, but otherwise, again, nothing for us to look at to execute on daily, which in many ways is a bit of a pity because this may well be stacking up to be quite a nice, even though it's a class 2 W pattern, a nice daily impulse entry right here for those folks who are trading more aggressively. However, for me, that higher time frame, selection time frame criteria has not been met. That being said, however, if you wanted to trade your lower time frame impulse strategies, you should be. This, even if you're trading a slightly more aggressive approach on hybrid, the fact that we got a couple of closes inside the previous phase 2's price territory means it did show some weakness here, but it is turning around. And if you're looking to trade that, you've been looking for a breakdown in this bearish cyclicity, which has now taken place with a phase 1 followed by a phase 1. But unfortunately, to be able to trade that, we need the pullback followed by another impulse candle. So waiting for that at the moment. And again, if we don't get that today, it's no longer really going to be a hybrid trade. It'll be an H4 impulse. So that's really, I guess, the crossover between the two. And that's pretty much it for our currency pairs. So having a quick exquisite gold, you'll see last week and the week before showing that dollar strength coming through with 2 impulse candles in a row on weekly time frame. And certainly last week, you can see how Thursday dollar strength came through. Surprisingly, nothing on Friday because we did see dollar strength coming through against many of its trading counterparties in the currency world, but not so much in gold. The Dow continuing in a bearish direction last week, giving us confirmation of a bearish impulse wave. If I just zoom into that slightly better, we didn't have it the previous week, but that lower low, lower close being below that preceding wave's low. So looking increasingly bearish, some bearish momentum picking up here. and more so than we've had for quite some time. So probably looking back to mid-June, where we had the last time we had a bearish impulse wave here on weekly on the Dow. But I'm more interested actually in my bellwether pairs, which is the S&P and NASDAQ, which we'll look at in a second. Interestingly, this morning, Dow Jones as well, continuing with that bearish movement. Let's have a look at our S&P 500 weekly first. That's just today. As a weekly candle, it's already almost enough for 1 week. So here we've still got this bullish cyclicity intact on the weekly time frame, but this bearish momentum picking up on daily, coming down to test the bottom of our HDC channel here on the daily time frame. So looking very interesting there as well, and a similar picture on the NASDAQ, almost identical, in fact, on the weekly time frame, but here on daily, of course, our the bottom of our HTC is a little bit further down. So all of that bullish cyclicity over, waiting to see here. If you're trading these on WM patterns, then this morning you would already be looking to short the market here on a lower time frame execution, dropping down to H4 and looking for that setup. All right, folks. Well, that's pretty much it from me. Again, if you are getting value from our reviews and all of our other trading that we're putting out there for you, please don't forget to subscribe to the channel. Smash that like button as well. I'd really appreciate it if you do that. If you have any questions for me, don't hesitate to pop them into the comments below. I answer them all personally. And I look forward to having you guys getting involved with our training as well. So make sure that you hit that notifications bell if you're watching this on the YouTube channel. Otherwise, you're also welcome to join the Facebook group and be notified when we bring out all future training. Right, folks. Well, that's it from me on this lovely Monday morning. I will chat to you through the week and look forward to that. Bye for now.